Broadcom has enjoyed a big rise in their stock price. The stock basically has doubled in 1 year, and it's benefiting from the expectations that data centers will have to build out for the AI demand that is coming. They've certainly have participated in that, but is it enough to explain a doubling of the stock price? I'll be answering that question in this video, taking a look at the company, looking at their earnings, and seeing where I think the value is for this semiconductor company. I'm going to value the company based on their free cash flows as well as their earnings per share and arrive at a price that I think the stock is worth. I've been an investor in Broadcom. I've known of the company since they started here in Southern California, and I've made lots of money on Broadcom, which has been great. I've been an investor up until recently when I decided to sell all my shares at the end of 2023. As I go into this video, please keep in mind that I am an individual investor. I don't recommend that you buy Broadcom or sell Broadcom. I don't recommend any stock that I ever cover, and I'm not providing any financial advice. Please weigh your decisions very carefully. I also like to introduce one of my sponsors, Moomoo. Moomoo is a brokerage, a trading platform, and they're offering pretty substantial offers to new account holders, beginning with they will pay 8.1% on cash for the first 3 months, and then after that, they'll pay 5.1%. They also will give out 15 free stocks, which is really nice. I'm waiting for my stocks to be issued out, and I look forward to seeing what is given to me in that basket of stocks. Take a look at the details in the video description if you are interested. Now, getting back to Broadcom. As mentioned, the stock has been on a great rise, up 97.1%. And year to date, stock's up 54%. When we look at this stock, it's really had a great rise. And it's hard to tell, but this semiconductor industry has cyclicality. What that means is, they have really good years followed by some mediocre years or bad years. In the case of Broadcom, they have certainly seen cyclicality. What makes Broadcom a little different is they're a fabless semiconductor. They don't own a foundry where they manufacture chips. They depend on TSM primarily to manufacture those chips. They really are the designers of chips that are for particular uses. They've been really good at it. More recently, they acquired a business. They acquired VMware about a year ago, and now they're combining VMware revenues with their semiconductor revenues. VMware is a software company, and they help virtualize servers so that companies and I guess individuals that use VMware can get more use out of a particular server, therefore saving money because you don't have to buy as many servers, and you can divvy up that compute across different workloads. It was a great application when it came out, 20 years ago, and has been a really good company. So Broadcom is now both a semiconductor company and a data center software company. Really interesting to see the company now, and they're much larger. So as we look at the stock price, it's been up 97% for 1 year. Year to date is looking great. Now let's look at their financials and look at their earnings. So their earnings were announced, and I'm going to jump right down to really what compares the previous year to the current year for the quarter that was closed. And when we look at the semiconductor solutions business, this is what the AI build out is going to affect the most. And I expected this number to be significant. If you look at the NVIDIA earnings, it was significant. That's where all the growth was for NVIDIA. I was a little surprised that it only increased by 6%. That's kind of a, letdown that, hey, wait, the AI build out is really happening compared. If you look at NVIDIA's earnings, as well as the hyperscalers that are reporting are saying that they're building out. So why isn't there higher growth for Broadcom? That is somewhat of a mystery and somewhat of a letdown for me. A lot of their growth really is in the fact that they're now combining the numbers for VMware into their financials. And VMware was an acquisition, and the acquisition occurred. I think it's a good acquisition. I think VMware is a great technology, but it did put a lot of debt on the balance sheet for Broadcom. Broadcom's a high cash flow producing company. I expect that they're going to be able to pay off that debt rather quickly, which is good. And that shouldn't be a big problem. But temporarily, their balance sheet is not in good condition. So I would put that out there. Overall, their earnings were okay, but the stock price really rose. It rose 14% early trading today. And I found that to be surprising. And the reason for it is their guidance is good. Their guidance is okay. Their growth is okay. I thought the growth in the semiconductor space was really low, 6%. I expected more like 20%. If the AI business is really that booming, 6% does not represent boom. It represents okay growth. booming is like 25%, 35%. But maybe that's just my opinion. Looking at when it comes to cash flow in the most recent earnings, the cash was a little light. It wasn't as good as it could have been. If we look at the most recent quarter close, which closed on May 5th, 2024, we have cash from operations of 4.5 billion. And compared to the previous quarter, it went down a bit. And compared to the previous year, it's pretty flat. So wasn't a sensational number. And the CapEx put into the business was about the same as last year. So there wasn't been a big effect there. But I expected a growth in cash flow. If you think about the Broadcom business, they're a fabless semiconductor company, meaning they don't control the foundry. They don't have to put a bunch of capital into the foundry. So for the cash from operations to go down was a little bit of a letdown and a little bit of a concern. Again, for the stock price to be going up so fast, I would expect that we're seeing a very good growth rate on the top line, which we didn't see in data center, and in cash, which we're not seeing either. 27 analysts cover Broadcom, and collectively they feel that the stock is fairly priced. They're pricing the stock basically where it's being traded now, which is really interesting. And some analysts do believe that it is priced, well above its true value. So I've got, an analyst here that prices the stock at around $1,000, and an analyst also believes, hey, the stock is really going to continue to go up. They're pricing the stock at $2,050. So that is interesting to see. So what do I think Broadcom is worth per share? Well, I'd like to answer that question by looking at the free cash flows that the company is going to produce. I'm also going to look at earnings per share and value the company using those two metrics. First, free cash flow. I'm going to forecast the cash that's going to be produced, the free cash by Broadcom. Starting with the first year, I expect they're going to do about $20 billion of free cash. It's an optimistic number. They're not keeping track with that number, but I'm still going to use it since the AI space is really flourishing. And I'm going to grow the first 4 years by 10%. And then terminal value at 4%. This business is cyclical, so this is optimistic, but I'm going to go with it. Looking at their discount rate, I'm going to go with 9 since this is a higher risk company. They have a higher debt than I like, as well as a cyclical business. And when I discount all those free cash flows, I get to a net present value of all those cash flows of $439 billion. I add the cash on the balance sheet, but take away the debt, which is quite high. And I get to an equity value of $375 million of value. When I look at the market cap, it's much less than the current market cap. The company's really just taken off. It's actually based on free cash flows in my analysis. It's about 52% overpriced, priced at a premium. Looking at their earnings per share, it's expected they're going to do about $48 per share. I'm going to give them a very favorable PE of 32 and expect that they're going to grow those earnings per share by 10%. And it gets to a stock price of $1,245, but the stock price is currently at $1,695. So there's about a 27% premium on the stock if we look at earnings per share. Combined, I put more weight in the free cash flow method. It's about a 44% premium on this stock. So should I buy, hold, or sell Broadcom? First, let's look at the company. Do I like the company, the industry? Do I want to be a part owner? And overall, the answer is yes. I've really liked the Broadcom business. I've invested in it for years, really liked what they do. I think they're faster to market when they need to bring out technologies for particular clients to use in their products. They've been very good at that. I think the VMware acquisition is really good. It'll help them stabilize their revenue since the semiconductor space is cyclical. I think their management team's doing a great job. So all those things look really good to me from a company perspective. The second is the balance sheet. Is the balance sheet in good health? Is it low risk? And currently it's not. Their balance sheet their debt is above 3 times EBITDA, which is a metric that tells me, do they have too much debt or very little debt? A lot of technology companies carry very little debt. In the case of Broadcom, they're carrying a lot of debt, which makes them a risky stock. Therefore, the balance sheet, in my opinion, doesn't get a passing grade. Discount. Is there a discount offered on the stock, or is it being sold at a premium? And I happen to believe that the market is pricing Broadcom at a very big premium. Over time, we will see if their performance meets up to that price, if it really fills in that price and rewards shareholders, or if they falter, we might see the stock really tumble. Therefore, I'm going to be a seller of Broadcom, and I'm going to consider shorting their stock because I do believe that it's a great company, but their balance sheet is a little risky and their stock price is way too high. I hope you found my video interesting, and I really appreciate you watching.